Folks, I'm excited to tell you about my new sponsor, Black Bull Markets. They are based here in New Zealand, and they're a New Zealand regulated broker who offers up to 500 to 1 leverage and over 26,000 tradable instruments. You can trade Forex, shares, commodities, indices, crypto, and they're an award-winning brokerage firm here in Asia Pacific with dedicated 24/7 client support and no minimum deposit. To trade with Black Bull Markets today, click the link in the description below or in the card above.
Good afternoon, good evening, good morning, everyone. Welcome to Scalping. Hi, my name is Jensen, and we're out here doing the Fidelcrest challenge. Today is the day that I'm not expecting any trades to take place because we have Big Daddy Pete with Jerome Powell talking 10. So there's going to be a lot of market volatility. Markets have just, as in retail trading, has just opened at 9:30, and there's an explosive move upwards. I was actually chatting to a person earlier, and I was saying that I'm expecting the buy side to get taken because there's some high volume imbalances on those levels. So if you're in the chat right now, welcome. Thank you so much for being here. And yeah, it's another day of watching pricing how it happens. And if we enter a trade, we enter a trade. If we don't, that's okay. Things happen. And we're just looking at our confidence, looking at our levels. If you're watching the previous streams, the previous two streams that they were on, we had Rodrigo and Diego. They were on. Great stream. Also had Aerial FX come on. They also had a wonderful stream. So let's get into the analysis of the chart quickly. I'm just going to bring this up and pull this up right there. Actually, putting it here is good. No, it's not. Can't see it clearly. Okay, so we have charts right now, and as you can see, I've set my 8:30 sell side and my 9:30 buy side. I expected buy side to get taken because my new the other day on my stream, we were actually at this level right over here, and I said I was expecting a short to go lower. Did I not tell you? Natology, hello. I said price is gonna go buy side as expected. Yeah? 'Cause everyone is thinking it's a short. Everyone's thinking one way, you start thinking the other. Oh, clearly it's straight up. Um, this is last time, we were expecting on the high side to the daily. So high time frame right here. We are working within this volume balance has just got taken to come down, come down. Yes, there was a big drop, and there's a lot of sell side. Sell side was just taken previously the past week, and it's coming down. So next sell side is around 1.0813, and lower we have massive and massive yeah. On the last side, this volume balance has not been completed yet. So if it wants to push higher, it'll push higher, and the higher objectives are the buy side right here. Volume balance in there, which nobody's that's important. So, what's wrong with the audio? What is wrong with the audio? You don't hear me? Just check quickly on the stream. Make sure that we have audio. Make sure that we have audio. No, the audio on my side is good. Okay. So, okay, it's good. That's cleared now. Thank you for spotting that. So this is just euro dollar. The reason again why I'm expecting buy side is very simple thing, and that's because DXY right over here. Okay, let's put up the high time frame on the daily. If you look at what's happened, it's just come into this volume imbalance, the one that I've marked out in all the in all the previous streams that I've done. But we still have. So as we're taking these buy side, this buy side over here, it's coming and tap this. I would want the body to close in there, but not necessarily. We still have sell side, a fair value gap here. If we're looking at a reversal, if we're not a reversal, if we're looking at a market structure shift on the higher time frame over here, we're looking at prices going at least to this fair value gap and then coming down, because there's a lot of sell side over here that needs to be taken. All of these lows and stuff over here, I call this the virus that shall not be named lows. Okay, right down there, price needs to rebalance itself all the way down on DXY eventually. But with Fed Chairman Powell coming up, he has clearly stated that he expects everyone to start. How do I put it? He expects everyone to start. Not everyone. He expects that they have had a failed thing where he wants he's going to increase the interest rates. So when you increase the interest rates, what does that mean? That means that dollar is going to go up. Dollar's going to go up, and everything else is just going to come down. So that is now being reflected on the other charts. So you have everything coming down with dollar going up. And we're looking at sell side objectives according to this. Okay, but in the move that was created yesterday, we have a huge imbalance. Now these imbalances don't necessarily need to, as you can see on this blue candle here, these imbalances don't necessarily need to be traded back into immediately. Okay, it can take time. It can carry on pushing, and then eventually trade to a higher time frame objective and then come down. Now this, because it's tapped in like this, it doesn't necessarily mean that it's going to drop today, but we'll see at 10 o'clock. So in 20 minutes, Mr. Big Daddy P is going to have a little conversation and it's going to get wild. Okay, so the move that you witnessed yesterday is probably going to happen again to some degree. Okay, but in the wake of price exploding downwards, okay, we have this explosion downwards and we have a huge gap over here. Now the thing that I have on my chart, let me just quickly zoom out to the 5 minutes. Here we go. One spot 06247. So we have one spot 06247 to 47 around this area right here. There's a super tiny volume imbalance in that area on euro. Okay. So if you're looking for exact prices on the buy side, apart from all of this lovely equal highs over here going upwards, there's a little point right there that I'm expecting price to eventually trade up and then come down, or trade up and then use that to go higher. Now what's interesting about that is, let's just take the higher time frame away and add in the end dogs and the weekly opening gap. You can see that the weekly opening gap from this week, it traded right through it, so it left a little volume imbalance right there within the weekly opening gap. So this to me is a high probability thing going along. But of course, how we get there, we don't know. We have to wait for news. We have to wait for all of the stuff and for them to do their thing. And then also we can add confidence to that with the institutional levels. Let me just take this away. So we have the institutional levels on the 15-minute time frame. As you can see, these levels are basically, it's set at every round number. There's a round number, there's a round number, there's a round number. Okay, and you have so this, for example, is 1.080, 1.090, sorry, and underneath that is 1.088, and above it's 1.092. Okay, so price always reacts around these big institutional levels, and it comes down, does this thing within that price range, comes down to the next level, it comes and snaps back up, goes back down into the level, it comes back up to the level, goes down to the next level. What happens? It goes back up to the next level, and then it's left all of this over here. Okay, now it's traveled right down to here. It's taken all of the sell side over here. As you can see on the high time frame, it's taken all of the sell side over here. And sorry, not that one. High time frame. Okay, so it's taken all of that lovely sell side, and after it's taken sell side, it's hovering around this area. And what you could possibly see is that it comes back up and then to this level, because this level hasn't been balanced quite yet. All right, now you can do this basically through every chart. So over here, there's a big level over here that hasn't been balanced. What's happening? It's just come into that level as soon as it reached there and has balanced itself in that price range. All the order flow for the previous few weeks has been coming downwards. So we have a price coming down, this has come down, this has come down, the next one has come, it's on its way down. Okay, but even though it's on its way down, it can come up in again and touch it. On its way down, can come in again and touch it. This is a consolidation week for a spike. I call it spikes. All right. Now, again, I'm looking at this week to at least be traded back up into, because this is a whole missed price action. So again, everyone else is projecting shorts. We'll see a 10, which is again in 16 minutes. When volatility comes in, it's gonna get wild. Okay, and so either, or not either, but what you can see is this little skinny one here. Price went up. We had a new weekly balance on the buy side. This is a weekly imbalance right here, right there, from Sunday to Monday over there. Okay, that little range right there, beautiful. Price traded to these two weekly gaps, came down, went to the next level. So I'm expecting price to come up to this weekly gap. If it is still bearish on Euro US dollar, and this is obviously going to be representative and reflective, the same thing on GBP. So I can zoom out on this chart, and you can see that price action has been completely bearish the whole way, going downwards. Very, very clear. Now it's busted through this range over here, which it needs to come back and fill at some point. With ICT and his teachings, what generally happens is that Tuesday, okay, either Tuesday or Wednesday, generally set the highs or the lows of the week. Okay, this is in general. This week's a bit dodgy because we have a couple of news events. We have non-farm payroll. We have what else? Non-farm payroll, and we have Big Daddy P talking. So there's a lot of stuff happening, like a lot, and things can get pretty dodgy, especially now, because the markets during this time on these days are heavily manipulated. We also have today, so let me actually just check the news. I think in my opinion, I think that news is quite relevant, especially when it comes to days like today, where you have a lot of stuff happening. ADP non-farm employment change, that was at 8:15, and as that came out, price started making its way higher. Now, as you can see, GBP is making almost the exact same move as I said on Euro. So Euro is actually leading this right now. US 500 still not there yet. So there's a whole, oh, it just came in and filled this actually. Just pull the, yeah. So this now is not completely filled yet. So let me just pull that up. This will need to be filled later on in price. And for US 500 and NAS will probably be the same because they're related to each other. If price comes down right over here, which is what I'm expecting, the weekly gap, as you can see, price went away from that weekly gap, created a new weekly gap, tapped into the new one, and it's coming back down to this one. I would expect price to come down here and then go back up. Or it could just continue to climb lower because we are in a sell profile right now where it's spiked up. This is a change in structure, going higher. But because dollar is quite strong, because Fed Powell made a mistake, and well, not a mistake, but it seems like their whole team has made a mistake and decided that their full terminal rate has to be higher than previously indicated. So that I think they were saying that the terminal rate for the interest rate rises would be somewhere around 5.4%. And they were wrong, because market data is coming out and showing a whole bunch of things. Okay, so they are now interested in increasing that even higher. Okay, they didn't say necessarily, although he didn't say how much higher. Now, as soon as Mr. Fed Powell comes up and starts talking about interest rates and all that kind of stuff, what you should be doing, okay, we're 10 minutes before the big event, is I actually want to pull up a different chart here so we can get some more in-depth, perfect little things. It is the T-note. So we're looking at the T-note. We're looking at the 2-year note futures, and to skip the 5 because the 5 is not as relevant. The 2-year and the 10-year T-notes. Why do you think we look at this? Nightology? Why do you think we look at this 10-year T-note and the 2-year T-note? I'll wait for the comments to come back in. Add that to the charts. It's heading to exactly to where I expect it to go. Euro. GBP will be around the same area, which is this weekly opening gap. It's gonna make its way up here. Now, during today, what's been happening is there's been a whole bunch of buildup of liquidity on the sell side. So as you can see, I'll just wait for that answer. The manuscript, Treasury notes dictated the dollar's lending power. Yes, it does dictate the dollar lending power. Now, why are interest rates important in the fact that they're lending power? It's because basically what happens is that as you have an interest rate increase, or they fail to mention that, oh, well, price needs to be higher, their whole concept is that everyone else starts trading their money into dollars because you can earn an increased interest rate on your savings, basically. So that's where they move their money, because they want to get yield. In following yield, it's very, very interesting. Other countries and big institutions and stuff will sell other currencies and buy dollar so that they can get the T-note and get that yield. Does that make sense? Now, looking at what's happening today, we just had non-farm. Trade balance is actually positive. Imports are positive. Exports are positive. This is all for for US dollar. Okay, we have JOLTS job openings, as well as the Fed Chair Powell talking at 10, which is going to be very, very soon. So that's in eight more minutes. Okay, so let me just pull up and just change this chart to the T-note so that everyone can understand. Okay, 10-year T-notes. Now I'm going to pull this out onto a monthly time frame so we can all understand. No, that with this one. Oh, it's not giving me previous data. No. So I have to delete these ones. Okay, and add in the T-notes. I want to see the bond further than just the last 3 months. Okay. Now let's look at not CBOT, because they're choppy. This one and this one, FXCM. They might give me a bigger range. Huh, that looks ridiculous right there. Looking at the monthly. It looks dodgy. I'm gonna go to the weekly. So what we're looking at is when was price last? When was price last at 0.5% interest or 6% interest for the American dollar? That's what you need to start looking at. Okay. And now, to be quite honest, if you look at prices 22, 21, 19, it goes back to 17. You can actually just do a quick Google search. When was price last at 5.5%? When was interest? Last at 5.5%. The 10-year T-note. Okay, so I'm looking at the historical price of when it was last at 5% or higher-ish. We're actually sitting there almost now, but higher, looking at 6%, because that's where they expect it to go, was 2015. What day was that? September 1st. March to September. So I can look at March to September on the 10-year T-note in 2015. This is July, March to September. This is around where the last interest was. Now prices come all the way down over here, but it's made a push. It's soon going to start, because this is monthly. Because it's increased, I expect price, or the US 10-year, to go up. This is just my personal belief. And on the 2-year, looking on the weekly again, you can do the same thing. It's looking back on price and when was 2016, 16, 15. Here we go. September over here. So we've had this massive downfall of people just selling. What are these historical fixed prices? Oh, these are home loans. I don't want home loans. US 10-year bond yield. This is not the right chart as well. It's not showing me, it's giving me dollar denominated things over here. But again, I'm expecting it to go up to, why doesn't it show up properly? US note. Yeah. It's macro. Pick up the pieces and go with the rain. I'll be the best above all the rest, put me to the test. Expect nothing less, you check as I'm chess, what's happening next? You got the venom, a tangible weapon, no coming in second. This life is a lesson, he got a new engine from pain, it's a blessing. New focus, no guessing, just bold an obsession. All in his possession, you got their attention, I'll leave it. And that's USA. Over here, US. You can actually find this a lot easier, it's not on this page. But if you go to notinvesting.com, you can go into other websites and find out where that interest rate is. Alright, because this all just seems to be following. This is like incorrect. In my opinion, that's just following what dollar's doing. Instead of searching inside for what they gave him, a strong will, strong mind causes mayhem. We could change the world, change times, rearrange them. Staying on pace, running the race. Life is a chase, I don't want a place. I want to be first. Work till it hurts, dehydrated thirst till I'm in a hearse. Is the audio clear? Can everyone hear me? Is it okay? Maybe I should just check the stream again. I'll find that website for you. Got it in my notes. Yeah. Barchart.com. Believe me, never had a lot of shit come easy. Had to work hard, struggle just to be me. Had to rise up just so they could see me. Did what I had to do just to feed me. News is news, stocks, options, futures. Movement to traders, no. Although commitment to traders and all that kind of stuff is also important. And I'll find it and I'll post it on my Twitter at a later date for everyone to understand. But I'll find the exact symbol for you, and I'll put it on my Twitter at the only Gensler. But yeah, basically go into barchart.com, and you can, let's just look at India, London, Sterling. Treasury bonds. Yeah, treasury. I'll put it up another time. What? What's the time? 10 o'clock happened. He's chatting. He's chatting. When he's chatting like this, look at what price is doing. The price is just seeking sell side now after taking buy side. Straight to, where was sell side? Right there, underneath all of these equal lows. The 1 minute, that is just an absolute rip downwards at 10 o'clock. Bang. Now it's taken all of this sell side. GBP, same thing. As I said, all of this over here, that was sell side, that's just been taken. Now from this point, we could possibly start hunting. Because what is price going to do? Well, it's taken sell side now, all of the sell side, and it could possibly go and start looking for the buy side. So I'm just going to the 1 minute quick and see if there are any volume imbalances. Go lower. No, nothing. I'm actually expecting, now that sell side has been raided, I'm expecting short moves and higher time frame. Yeah, that was beautiful. Came down, snapped it, not allowing any of the traders over here. Okay, if you got in a trade over here, great, you've been in that trade for a long time and you've just been waiting for like 9 hours. Okay, but right now we came snapped in, and I'm expecting price to go higher. Now it could find resistance at candle right over here, just underneath this candle over here. So let me pull that up. Like that. Right there. So my whole profile today was it's at this point it's going to set your buy side and your sell side. As soon as it took buy side, there was an ever so slight divergence over here between dollar. Okay, let's go into the 1 minute quick. Between dollar right over here having gone low to a lower low, whereas Euro USD went high to a relatively equal high. So that was a divergence, but if you're one of those news traders, fantastic. But yeah, sell side's taken, and now it's seeking what? It's seeking to either balance itself out, that whole downward candle, which is right. There's a little volume imbalance right over there. Volume imbalance, and it's gonna break and go. In my personal opinion, it's breaking to go higher, as I outlined before. Like, I mean, what kind of candle is that? That's the 15 minute. Let's look at the 5 minute. So we had set up this whole liquidity the whole day, and then that got taken out, it got taken out, and then you could consider this last, on the 5 minutes, this last blue candle over here, that whole candle there is now a breaker. Because you've gone up, it's gone higher, it's gone lower, and it's going to go higher, come back in to that breaker and go up. If it doesn't want to break these highs over here, because they are now quite equal, so let me just put that in. That is nice equal highs right there. Buy side liquidity. Then you have classic displacement. You're trading in to either a fib level, which is the 38, to trade down, to a point of interest, which is a fair value gap, is right here. I look at the other side, higher, where are we? Because of this price over here, there's a whole bunch of little volume bands, especially by the last candle was this one right over here. So there's a tiny little volume imbalance right there. And if you're looking for fair value gaps to trade upwards, always look at the last leg before. And you have fair value balance, volume imbalance, and we trade. But again, power still talking. So it's dodgy days indeed. Actually, let me just leave that in there. And I'll leave this in here. And we witness what price is going to do. What's Big Daddy P saying? Let's have a look. Again, we're tapping into that those little volume balances that are in there are perfect, are absolutely perfectly in line with this weekly opening gap from the from here, from previously. That weekly opening gap right there is perfectly coming over here. Now we see this price wants to go down into the next level, or from over here, are we looking at sell side liquidity taken, and now it's going to range all the way back up to the previous weekly opening gap. Which is personally what I'm expecting. Let's look at US 500. Whoa. That saw a massive down candle as well. Almost touching in this fair value, in this weekly gap previously. That was an interesting price right there. Beautiful. That was a stunning take of liquidity. Just bang, let's go. Higher. So what's 50% of this range right here? From here to this fair value gap right over here, your consequent encroachment. So this level is also pretty important. So let me just make that a yellow level. Orange or whatever color that is. Up there. The last volume imbalance on the buy side on the 15 minutes over here is the volume imbalance. And now I have something that's very, very interesting for all of you who like TradingView. On TradingView, all of these lines that I've manually drawn them out. Okay, is so say if I go to my Euro USD over here and I go into my 15 minutes. If I pull up my new day opening gaps and my new week opening gaps, okay, I have my high time frame, which I'll just minimize, and yeah, that's not on, that's not on. And I can minimize this. Oh, look at that candle. Perfectly into liquidity. Absolutely perfect. Now, this is something that not a lot of people are aware of, but I call it, as you can see, 3D11S. Why do I call it this? It's the 3-day 11s. So you have 11 p.m. and 11 a.m. You draw that out in time. You have 11 on Tuesday and you have 11 a.m. on Tuesday. So price has just come from the 11 p.m. and is now highly likely to go to the 11 a.m. Previous day, you can see 11 right over here. Monday, 11 a.m. Tuesday, still Monday, 11 p.m. Okay, what does price do? It taps, there's a whole bunch of liquidity over here. It taps right there and it targets the next range in the next week. And you can do that back through your charts. So we have this and this. It didn't actually come, it came to the week and then went up and then came down. Now this is a golden gem that not a lot of people know about. And I'm sharing it. This is something I've noticed in price, that those levels are quite important. Yeah, so what was I doing? I was doing, yes, my these new weekly gaps and new daily gaps, right? There's an indicator that you can get called the NWOG NDOG by Kryptonite. You open that and you can see what's happened over here. So let me just pull up the 15 minutes. You can get these levels relatively similar. So that NWOG is right there. We have an NWOG up here. Okay, now you can obviously change the colors and do whatever you want. You have NWOGs and you have your NDOGs. My lines and my charts are very, very similar to that, although it didn't do today's one. That's the previous days. So if you can't be bothered drawing stuff on your charts, that's a great tool to have. And right now we're just chilling within the weekly gap and the daily gap, which is right there, already drawn out on my charts already. Let's look at dollar quick, see what it wants to do. The dollar has come into, this is a new daily gap. Come in. On the lower time frame on DXY, I'm looking this structure over here Okay, Daddy P is talking, so we're waiting. So manuscript, you can apply it, as you can see right here on my chart, you can apply it to, where was the 11, 8, 9, we're not there yet. The previous day, 11 is right there. Looking at the one previously, 11 AM is down here, where that blue one is. So just go into a larger time frame quick. Okay, and minimize that and the higher time frame. The last 3 days have shown 1, 2, 3. So the last 3 days have come from a low. So if you take this kind of a concept and apply it to a fractal pattern of some kind, you'll be able to see very, very clearly what happens to price. So let me just do this on DXY. Okay. Now DXY over here, that was Thursday, and that's Friday, 11 AM and 11 PM. So we've gone into London session and we've gone into US session, and it goes and snipes all of this right to this daily opening gap right over here in price on Thursday. And as soon as that happens, it creates a new one, it goes down. As it goes down, we then have our 11 o'clock the next day, and what happens? London session goes up into all of there, goes straight down, sets the new day, trades around that area, sets a new one, comes down, and then because it's after 3 days, it starts targeting the next 11 PM levels. Here we go. So these levels over here were all relatively close. Those are close. What happened after the 3rd day? There's a whole bunch of stuff that happens here. It goes up and starts setting new levels. And it's consistent. Let me just go into the US 500. I haven't actually set my 11s for this. This is monitoring price right now. Yeah, that was beautiful. Absolutely beautiful. Okay, so just quickly, we're going to go on to EURUSD, and you're going to see now on this trading platform, it actually hit this, but on FXCM it didn't. So it actually tapped there and it's come lower. Yes, so I was looking at the US 100. Let's just go. It's very easy to do this on the 1 hour. 1 hour. All you do is you do the last. You do the last 3. You go here. Where's 11? 11 at the open. Yeah. 11 at the open. Back to 11 at the open. Then you go back to 11 at the open. Like, I mean, does it get any more perfect than that on indices? Okay, let's go back to next 11, which is the open over here, just where that fair value gap is. So we have 1, 2, and then the third one will be at this open right over here, and this open over here. So as price extended up all the way over here and created this, it left all of these open. Okay. Now, if you're looking at this on a daily time frame, you can let's just carry on going back. 11 open and 11 the open. Now, if you at this again, this is an hour chart. Let me just put it down into the 15 minutes and scroll back into that point in price. And we're looking at sessions during this. Okay, so we have a breaker structure. Obviously, this has been a breaker structure right there. It comes up, 11 was set. What's the next? Lunch hour in New York. This gets tapped. There's a fair value gap over here, and then it blasts off. Comes back, sets you 11 o'clock p.m. Okay, now in London session, okay, it pushes. At 2 o'clock, what are we expecting? We're expecting some kind of manipulation beneath a low of a sort, which is right there. You could either have taken this low or this low, doesn't matter. And then it comes up, and where does it go to? Oh, it just doesn't get there, just in the London session. So what do we have to do? In New York, we have to make sure that we get to that point. Wow, that happens, it reverses all the way down. Now 11 is set at the low side, and it comes lower. If I went back in price, I'm telling you that this level down here is somewhere around 11. So let's go back. 11.15, 11 open there. Comes in, goes down, 11. I mean, if you're looking at fractal patterns, okay, it's very interesting to see, because you see this, it starts breaking lower. Where's it going? It's aiming this liquidity down here. Yeah, this, as soon as this liquidity is taken out, it then starts setting a new profile, which is where we are right now. We are in a profile to seek. As it does this, it raged and obviously took all of this out. But as it's done that, it's set liquidity, but it's left these behind. So we're going up to come down to, depending on the next few days of trading, to go back into it. Now remember what I said, I am actually long in the session, just because we have come into here during the session, and I'm actually expecting it to go up here, or even higher into there. If it doesn't want to do that, then we're expecting the fair value gap down here at 39.40 for 39.50. If you overlay your institutional levels the same as I did with Euro, okay, we have our institutional levels. So let's put the 1 day on these institutional levels. Okay. Very, very easy to see what's happening with this. I know it's a lot of lines, and I'm sorry. Okay. Oh, look what price is doing. It's going to the bar side. How unpredictable. How unpredictable, right? Hey, unpredictableness. Okay, so we are obviously in a larger downtrend. Okay, now price was always makes this, but as it comes up over here, starts going down, it does a thing. It's broken this structure over here. Now it's coming up. This is important over here, because what's happened is it's actually changed. It's changed its structure 2 times. What I mean by 2 times is that if you look at this price over here, okay, that got broken. Now it continues to come down. Now, if we're looking at the next, that was a leg going down. Now, if we're looking at this leg going down, okay, we have this being broken over here, and we could possibly now be looking at the next level going up. But now why I pull this up is very, very simple. Price reacts from round numbers. Very, 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 very easy to see. Price comes down to a round number, goes down to the next round number, goes up to the next round number, goes down to the next round number, even lower to the next round, even lower to the next, and then it just bounces between the round numbers. all the time. Now, if you're looking at institutional levels and interest rates and all this kind of stuff, as I expressed before, very, very easy to see that yes, everyone today, everyone was bearish. They were just so bearish because they're looking at this price structure and they're like, oh, it's going to go down, it's going to go down, and it's going to be a retracement, but I don't know where the retracement is going to come from. You can look at price, look within price, and see exactly where it is. So if I am coming over here and I look at the 1 minute, okay, what's happened over here? We have that big large move down. Now within that move, what do we see? We see a volume imbalance right over there. That volume imbalance gets hit perfectly and comes down. This is an area of interest for me because if I look at the Euro US dollar on the 1 minute as well, just like I expected, I said as that price came down, it's going to go up, and from this level, you could have taken a trade. I was just getting distracted with a whole bunch of other things, set it there and set it higher because price is actually going to that level there. That's where it's going. It's just random, right? But anyways, I was going to remove that, and if you were in the stream earlier, you would have heard me say those things, and all of that was taken. 11 p.m. candles confirmed that 11 p.m. was hit. Like, let's look at the exact price. 5294, 5291. It doesn't get more perfect than that. As soon as you see rejection from that and it has a big move up, where I'm expecting on a day like today, and I actually said it earlier in Rodrigo and Diego's stream, I said that I expect price to target both sides of liquidity because Powell's talking. Over here, sorry, over here, okay, buy side was taken, and then it came and took the sell side, just like I labeled between 8:30 and 9:30. You have your buy side and your sell side. It takes buy side, it takes sell side. Now the direction it's going, because it's broken the buy side again, okay, and it's already taken all of this liquidity. Where would price likely be going? Up or down? Especially after it just took all of these equal lows down here. She hasn't taken those lows yet. Yeah, it did right there. So that red candle, price would be going up. But because it's Powell talking today, I'm actually not taking trades until he's finished. So I'll be looking at 11 o'clock as a potential confirmation. So let me just move this to 11 o'clock as a potential confirmation into where trades are going. Now I've got a very interesting tool that I sometimes use on tough days. Okay, and it's called the LSMA. Now the LSMA, it's like looking at price. It's called the least squared moving average. Okay, now let's just open that quickly. In confluence with all of our other things that we're talking about. Okay, if you are an indicator trader, okay, we have price doing this. It comes up, the LSMA, as soon as it touches it, you could be in a short. This is just a hypothetical. Okay, you have price over here, it's going up, it's going up, it's going up. What happens? Price goes up. You could be in a buy from that point over there to go up. Now what's interesting is that if you use ICT's concepts at the same time, within that you have a fair value gap. So as price comes up here, it taps into that and starts blitzing away, taps into that. What are we looking for? We're looking for the next fair value gap over here. And you could be taking your buy from there, stops underneath this low, and you could get a little bit better risk to reward. Now, here, as market structure changes, okay, and you can see a clear downwards, every single time it goes down and down into it. If you have a sell side objective, like say this 11 p.m. candle, after that 11 p.m. candle's taken, very easy, goes down, comes up, comes down. You can take your short over here with price here, and you can continue going lower. Now, same thing, where you can ladder into your positions. So the next time it comes in, taps it, goes lower. What do we have? Again, we're looking at ICT's inefficiencies and stuff. I'm expecting lower prices. So we have fair value gap here. We have fair value gap over here. If price doesn't reach here and comes back in, you can take a short. Next trade is basically fair value gap. This is scalping, like my scalping methodology. You go to the next high, which is there, and you can go lower. Now again, this is like a good model for like a trending market, but the only problem is that the market's only in trending markets for about 30% of the time. Now the rest of the time, the 70% of the time, it's consolidating. So it can get pretty choppy. Again, price goes down, comes up. Where does it go? From the 11 p.m. candle, goes up to the 11 p.m. candle. Funny that. Okay, breaks down. What does price do? It goes up, it comes down. Hits it hard. So being super aggressive, if you want to be aggressive, you could trade that and you could go down. Or you could just wait until the pullback. And then the pullback goes, oh, I'm going to come into price over here. What do you start doing? You start looking for imbalances in price. Where's the imbalance in price? The balance in price over here is this fair value gap behind. This whole section over here. Okay, as it comes down, you can be safe taking from here, going lower. And if you, say, for example, took that trade and wanted to be mental and hang on to it for days, not days, but for hours, you can, and you were expecting price to go lower, like I expected it yesterday, it goes lower. Now, if you watch my stream again the other day was on Monday, I was expecting price to go lower, and it came down, next came down. Now this could have been a nice like 16-hour trade. And again, this is all within sessions. This is London session. This is New York session. Come up. As you see price start to come down underneath that, you can look for this. And boom, from there to there, as price gets back into the LSMA, very, very simple. Highs, and you're targeting lows. Happens again over here. Because of this big price leg, big moves like this, I wouldn't like to trade. Okay, but as soon as it continues down, we go up and we come down. What time is that? Around 11 o'clock. You know the price is going to do something until around 4. Until 4 o'clock, which is here. Okay, you can take your price right down to 4 o'clock. And then we have chop, 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 chop. And then today has just been super chop. So I have not been participating in the market whatsoever. Now to see it that way, it's basically, the line is literally representing price. Almost. Okay. But just making simple rules, simple ways on how to engage the market, right? Without getting stopped out. So my whole bias today, let's go into the 5 minutes, was that I wanted price to go up. Why? Because we've come up. What are we looking for? We're looking for all of the imbalances. Yes, there are equal lows down here that can be taken, but it went up, took it, came down into a whole bunch of liquidity. If you go into your broker chart, you'll be able to see that there are 1,010,000 different volume imbalances. If you're looking for volume imbalance and you don't know what it is, volume imbalance is fairly simple. You have a candle and from here you have a candle. Now the wick over here can do this, and the wick can do this. Okay. Now a volume imbalance is basically where the body of the candle doesn't touch the next body of the candle. And if you have it on the bar side, it looks like this. There and there. So that is a volume imbalance on price. And same thing on the sell side. That is a volume imbalance. So on the 5 minutes right there, we have price that's kind of up. It's come down into the fair value gap right over here, drawn out. It rejected the 11 p.m. candle and it's gone up. So if you're using the LSMA, you go into the 1 minute. As soon as you see price do this, that's why I said this area over here is looking good for a trade, going long, and then you go long and done. That's how I use the LSMA. If you've learned something, hit a thumbs up. So the markets will just rip you in half if you don't have a way to enter and you don't have a bias. Do you see how this volume imbalance that was on my broker chart that I mentioned before? Okay, I drew that out in price before it came up. Now as it came up, what did it do? That's why I say I'm a volume imbalance trader. Is that it came out into this volume imbalance, which is not on this chart. I'll show you on the other chart. Let me just make my face big. Sorry about that. And pull this chart up right here. And open this. And what we're going to do is we're going to look in price right there. Okay. Now what's interesting about this, let me just go do this, is that volume imbalance is right there. Funny. Yeah, you see no bodies going in there. As it breaks past, it taps that and then hello. If you see on here, there's a lot of different volume imbalances inside a price. You have voids. So we have this void over here, we have this void over here, volume imbalance over there. I mean, and you can just see how price respects these price points. Now where might we be targeting right now if we're not going buy side? Is we have a volume imbalance just down here, and we have a volume imbalance here and here. Now I like seeing this when we're coming into the sell side for a reason, because price likes to gap. And that gap is important. Why? That little volume imbalance there, and then a little volume imbalance here. So that showed you that's happening twice. That means it's being respected, and it's just gapped completely down. As we go back in price. So now I'm looking at if this is a fair value gap here. A fair value gap is where you have a wick, a body, and a wick. Okay. Right there. Now I'm looking back in price to see if I have a buy mentality. Okay, I'm looking back in price to see if there are any imbalances in this leg. I don't see it. So right now with this leg, we have fair value gap over here. And if price it breaks 1, it needs to break the second imbalance 2 and 3. If it breaks below this point, I'm out of any trade, and I'm then expecting price to go lower. Now, if we look at USA, wait, could you see all of that? Here we go. Let's draw this out. These levels can be treated, can be checked again and again and again and again. Now, let's go on to the US. Here we go. Okay, now we're looking at this price, and what's happened, okay, is we have set up a whole bunch of stuff over here. As price comes down and goes up past there, there's a little fair value gap over here. Now that is perfect volume balance trading to go up. Gaps down, gaps down, gaps down. We have fair value gap 1, volume balance 2. If it goes lower than here, of course, it's going to carry on going lower. So if you were trading again, I don't trade this because the spread is absolutely ridiculous. It's like $2, right? It's 2 handles right now on this broker. But this broker is really good for Forex. Forex trader? Yeah. Okay.
A strong will, strong mind causes mayhem. We could change the world, change times, rearrange them.
Now again, looking at this leg over here. Okay, it broke up, and if it's going to come back down, what am I looking for? Well, there's a tiny volume balance over there, and there's one underneath here. And so it comes in there and it starts going up. So you could then have confidence to take a trade from here, put your stop under here as it starts going up and go higher. Of course, it reaches, you have to have low-hanging fruit. Low-hanging fruit's pretty simple. It's basically just going to the most local higher high. See what's happening from this imbalance right there? How price is come down, and it's respecting and doing a whole bunch of shenanigans.
I feel nauseous, believe me. Never had a lot of shit come easy. Had to work hard, struggle just to be me. Had to rise up just so they could see me. Did what I had to do just to feed me, and what was left over I put towards my dreaming. But the only thing in life that I are the things you gotta work for, believe me. Take into your hands a plan, your own hands can land your own brand, and damn, I feel like no one takes want the credibility, convincingly unwilling to put in the hours it takes to get some power. Don't be fucking sour, take a cold shower, scream until you're louder, work until you're prouder, and all the doubters, they're just your downers. I swear to God they all let me down. I always fought just to wear the crown. I'm off at these fucking clowns who were all taught they deserve it now.
And let me just draw out this little imbalances in price right here so that everyone can understand where we are. Bum, ba-dum, bum. Uh, 545. 5, 4, 5. Over here. Again, there's a fair value gap in here. If it breaks below here, I'm expecting price to go lower. If it doesn't, then we'll see.
Off at these fucking clowns who were all taught they deserve it now.
excuse my coughing. I've just got this niggly cough that just doesn't want to go away. When we're here, let me just take this away. That's when news came out. Tomorrow when real-time trading opened. High time frame.
I feel like I'm losing my mind. Is everybody in the
11 o'clock is coming very, very soon. 11 o'clock is, again, very interesting because what happens at 11? Your 11 o'clock's over here. 11, 11. 11, 11, 11. Price always, for some reason, especially from the evening 11 o'clock, right, always wants to do something from that level and go down. Let's look at the evening or the morning. Morning or evening. 11 goes up. 11. 11. That's beautiful. Anyways. Pull up the weekly gaps. See where we are. Weekly opening over here. Daily opening over here. Okay. Come in again and tap that sell side, which is by an 11 p.m. candle right there. It's gonna be interesting to see where they set this. If anyone has any questions, please don't be afraid to ask. If you're feeling super confused, let's have a look at US 500. Beautiful. Came in, equal highs, filled up. So that's that one. Filled this perfectly. As it came down, snapped this liquidity down here and came back in. Look at that. US 500, that's why I say the US 500 is, or ES mini is beautiful. Because we look at this fair value gap over here. Okay, it's gone up, gone up, gone up. Taken the high, come back in here, and it's broken higher. And it's filled in the whole day. And it's gone even higher to almost a perfect round number. Yeah. There's a tiny volume imbalance over here. That volume imbalance was respected perfectly, targeting liquidity. Jumped higher, came in, and hit that level right there, went up almost, failed. Let's go look at dollar, see what dollar's doing. Where are we looking at dollar? we've come from one high. And there's all the sell side. As prices manipulated lower, it went higher to take out all the equal highs. And perfect. Beautiful. ICT magic. That's a good GBP. Stunning. Same profile. Take it lower, hit it. If you're trading ICT using OTE, you take it from this candle to the highs over there. So you take the low to the high. Using OTE, which is either 62 or 79%. Very easy. There, low, target the highs, or standard deviation. And there you go. That orange line there, that's consequent encroachment of the daily opening, right there. Now, this price action is beautiful, in my opinion. So if you go into the, what do we see? Okay, price is consolidating. It breaks. This to me normally signals some kind of big move in price. All right, as you can see, all of this over here. Okay, price goes down, up, and where it goes where it wants to go. Actually, let me pull this up and change it to my face. There we go. Now, where else do we see that in price? All that consolidation, and you have a big down, big up. Now, of course, it's on big news days. Go back in price and have a look. Yeah, it's not. They don't have a big consolidation. Go back in price, It normally happens at the bottom or top of a move. And it has to have consolidation. On the other side, here we go. So there's a whole bunch of consolidation over here. There's a big move up, there's a big move down, and then price starts targeting reverse.
You could try to
can't go back further. That's okay. Over here, if you're looking at this, it's gone down, it's gone up, and then it continues to go up. Look at a smaller time frame. This consolidation, it's broken, and then it starts going down. That didn't happen there. Happen there. Here we go. So again, consolidation. It's broken down, it's broken up. From there, what happens? It kind of goes down. Consolidation, up, down, change. And this is on the 1 minute. It can happen. Here we go, consolidation. Up, down, changes. Consolidation, up, down, in, down. It just happens all the time. Every single day. What do we have here? We have this consolidation down, up, and then it goes. I'm looking. We'll see. Now where's price come to? If you look at the fib, again, from here to here, like I said before, the 38 OTE, nice. You go from here to here, 38, right there. If you are long. DXY, what are you doing? Came in, start all of these, gone lower. Yeah. Let's look at the high to low. 38, sorry, 62% retracement. That's what it'll be on your fibs.
Everybody wants to be king, yeah, they all wanna ring, yeah, we all wanna be free. So show me what you got, what you bring, how you fight in the ring, how you take a fucking swing. Do you got heart, are you mean, got some scars, got some needs, are you willing to go bleed? I swear to God they all let me down, I always fought just to wear the crown. I'm off at these fucking clowns.
Today's an interesting day, actually. to Fed Chairman Powell. See what's happening news-wise. Oh, the manuscript. The music is actually like a free audio library on YouTube. But I literally just searched for some like hip hop rap bangers and basically just downloaded everything that was on there so that I could put onto the stream without it being copyrighted. So 2:30, 10:30 was a whole batch of other news. The next news we're looking at is the 10-year note auction at 5. So from here, 3 hours. I'm looking at 1 o'clock being like the next time. So at 11 o'clock, like I said, there'll be some kind of shift wherever this candle lands, and we're looking at 1 o'clock. That's when the next news is coming out, like the next relevant news, because the other news comes out at 12, at 4 o'clock. So it's normally consolidation. Like between 12 and 1 is like lunch hour consolidation. So yeah, just cheers. I'll try to find some more for my next stream. See now, if you're ever in a trade, okay, and you're scalping, and you see price doing dodgy things like this, okay, it's like super dodge and doing a thing like this. I normally, if I'm in a short, I would get out, or if I'm in a long, I would get out as well, just because this price action over here is just what I call its chop. So that's why on the 15-minute game, it's just chop, 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 chop. If I was in any trade, I would have been out a long time ago. With ICT, what you want to do basically is you want to be in the candle, you want to be in the trade and for it to explode where you want it to go. As it came down to here, that little 1 minute candle at 10:22, that is the perfect analogy. So if you go into US 500, 1 minute, as soon as it goes into that volume imbalance right there, bang, it goes up. See what happened right now? We had the OTE, which was within this fair value gap over here. What's behind that? We're looking at volume imbalance. We're looking at volume imbalance. That was respected beautifully. And here we go. Below that fair value gap. Even just go, if you're trading, to the nearest high, which is this one over here. And then if it goes high, it's that one there. If it goes high, it's that one there. So partial, you're already out. 1, 2, 3. Yeah, this is going down. Sorry, that's dollar. Dollar's going down. Why? Because it's just there's three versions, not three versions. 3 PD arrays that have been broken. So you have this fair value gap over here has been broken. This volume imbalance up here has been broken from that leg, so the price should have held. Should have gone below that. Just underneath that, you have another one right there. It's been broken. Because of that, then we're short. That's basically how you just check. Like if you're afraid to take profits, or you're afraid to get out of trades or whatever it is, you can have rules that are set up for you to exit. Yeah, the market's been chop. It's been so chop. I'm just trying to find an example for you here in some clean price action that's not just super chop. So, PD array. If you were, say, getting into a trade at 10.10, like I probably would have, as soon as I see price break this fair value gap, break the next fair value gap, which is there, and of course the next fair value gap, yeah, I am then extremely bullish because I would expect price to go higher. You should literally enter. Well, I wouldn't enter right there. I'd enter afterwards for a pull back. But I would then look for three things going short. So we have fair value gap, and underneath that you have volume imbalance. So your short should be underneath that, and you just carry going along. That's same thing over here. 3 versions have been broken. You have fair value gap gets broken. That imbalance. This fair value gap gets broken. This fair value gap gets broken. That turns into your breaker right there, which ultimately refers to a beautiful little one there, and it's come down. So you have 1, you have 2. If it broke below this volume imbalance right over here, that would be a third one. If you're looking for a trade coming back, you trade from anywhere inside of that breaker. Just say you traded the middle of it with your stops underneath the third continuous continuation. Have a look at price. Have a look. Right here we have 1, which is over here. That's been broken. Our next one, that was too perfect. 2, and then the third one is that high. If price decides to break above this, we're out. So I'm busy looking at my chart to see if there's any imbalances that you can't see on the trading view. Yeah, so I kind of believe that we're going to look at, after this move here, I don't think there's going to be anything else happening in price. Well, not really trading opportunities. Because we've come into that fair value gap there. One, two, three. So dodgy, this price action. 7. Okay. See how it respects this fair value gap on your USD. Why I pull up GBP is because it's very interesting to see the same thing happen in price, or if it changes. So if this busts up and euro decides to stay at the same place, it's an interesting area. If it keeps on going up here, then you're in the money. Hopefully everyone's in the money already. Second. Oh, that was stunning. DVP's actually been really clean lately. Been really clean. Yeah. Long zone. Now it's running. Just going high. That price just touched. If we touch this Tuesday, Thursday, Friday, last week Tuesday, new week opening gap. I mean, new day opening gap. Like beautiful, absolutely beautiful. That I mentioned before as well about the price going. If you have a direction, the price goes up, comes down. The LSMA, if you're ever confused, price comes back in. Higher high, equal high, equal high, divergence. Yep. Anyway, here you could have gone in for a trade with this underneath or this underneath here. Taken it up. Using that LSMA concept, you would have been sorted. 11 o'clock. Right here on the open, right there. Bang. And we have come from this weekly gap over here, this weekly set level over here. Like I said, I'm expecting it to come to this level here. If it doesn't want to get there, I'm looking at the middle, which is right there. That's the middle. That would be the highest portion that me personally in the trade that I'll be in. If it decides to break from here, that's what your stops are in place for. Long as hey, really long. anyone has any questions or anything, feel free to ask. Amazing. Amazing just to watch price, see what it does. But yeah, my analysis for today has held up pretty well. And I hope that everyone who's watching actually learned something from this today. Because that would be like the best thing ever for me personally. When the crowds are all screaming, sell. Sometimes they're right. Most times they're wrong. So everyone was screaming sell today. But again, using the way I trade 1 minute, I trade very, very small time frame. And what I do is I'm in and out and in and out. Coming to this fair value gap now, I would want price now to bust higher. If it doesn't bust higher, then what we're doing is we're just going to be ranging again. Cheers, manuscript. Thank you so much for being here. I appreciate it. Okay, now on the 1 hour, it's very interesting. Actually, seeing this candle form. When I look at a candle like this, what I like doing is I like setting your buy side level and your sell side level down of that candle itself on the 1 hour. Yeah, manuscript. Which way do you trade? So I'll find another example of this in price. But you have a small body with 2 wicks right next to it like that on the 1 hour. On the 1 minute, that's literally it just looks like that. Now when you're here, what we're looking for is for price to show you which way it wants to go. Let's go find another area in price where we see this. Dun, 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 dun. Right here. Alright, so here we go. We have this high and we have this low. So if we're looking at that in price, okay, your buy side and your sell side. The 1 minute is going to look like this. Now what we're looking for is looking for buy side to get taken. Buy side gets taken, it raises whatever it wants to do, and then comes down and takes the sell side. Go back in price in the 1 hour. Here we go. This candle right here. As soon as it did this, came down. I haven't seen price go back up there. So that's why it's one of my high time frame objectives. Price again, a little bit further, a little bit further, a little bit further. No, 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 no. No, 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 not there, not there, not there. Here's another example. Like this, there's two of them right there. So what does price do? It goes and it consolidates, it takes this, it takes it even higher, but then ultimately it's crashing down. Very interesting to see. You can see the same thing on that same little candle right there. We have buy and the sell side. What does price do? First of all, it takes out the sell side right here. After taking out the sell side, it starts aiming to target from a time, 4 o'clock. We have Asia into New York, whole day. Takes out that. I enjoy candles like that. There we go. There's another example. Because the reason why I look for that, I look for the buy or the sell side. DXY drop after motion and then retracement into OT. So let me just check where you are. What time frame are we looking at? The same thing here. Buy, into low. Now, right now, we are currently smack bang like 50% in the range. Okay. So the price can do from here. It's not gonna need, but what's gonna happen is that they're gonna target one side of the liquidity first, and then start looking for the other side of the liquidity. The 5 minutes, let me just check. Are you in, oh, which pair are you in? EU, AU, GU? S&P. Oh, so what you were looking at, expected DXY to drop after market structure shift. This fib retracement, sorry, the retracement happened here, then it happened here. If you're in the trade, you had your entry over there, and you had your stops just below that fair value gap. And if you were able to get out with a 1, great. If you're able to get out more, great. But as price dropped in here, what I tend to do is, if especially when you're scalping markets, is from your entry price over here. As soon as price breaks the range to start pumping higher, I raise my stop. So let me just put that as stops. So my stops will be here. As soon as it's coming here, sorry, as soon as price is coming here and broken higher, 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 I then put my stops just underneath here. Actually, excuse me, and I'll put it into profit. And it's just safe to safeguard your equity, to make sure that you're not because on the lower time frames things are pretty intense, and the market can come back and snipe your, because if you see here, as we came down into there, you have equal lows over here. Yeah, these equal lows align with that fair value gap actually quite beautifully. Yeah, as I was saying, there's a 1 hour. You're looking at that high now as buy side, right there, and you're looking at this low now as sell side. Now, because we are smack bang in the middle at 50%, and the market is kind of directionless. Oh no, you got an after broke. With the ICT stuff, it is, I completely understand where you're coming from, because you feel like you get the FOMO, and the FOMO kicks in and you're just like, I have to get into the trade because it's going to move without me. But if you've done your analysis and you personally see it come to a certain level, and you've back tested your method long enough, you'll be able to tell or trust in the OTE and trust in all the different things in price that happen. Where's DXY? DXY on the 5 minutes. Again, on the 1 hour, we have that candle right there. We're still in the range. That candle on DXY is there's a little fractal over here. So we have 1, 2, 3. So a lower high, 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 lower high, breaks the next candle short. 1, 2, 3, doesn't break. We have 1, 2, 3. It breaks. The next candles are going to be short. We have 1, 2, 3. So coming up, now it's interesting. I actually am in a place right now where I don't know, and when I don't know, I don't trade, because my trade already happened for the day. It looks to me like it's engineering a whole bunch of sell side. But we are still within a fair value gap. So as long as you have your stop losses and stuff in place, you should have no stress, because it's all part of the it should be part of your plan, your risk management. Risk management is a key factor in trading. I'm sure you're well aware. I'm just seeing how price is reacting on the 1 minute chart on Euro USD GBP. So what we're looking at here is you have consolidation, a break low, a break high. We have this whole thing over here on GBP as a breaker. We have this section, or this last candle, and again this is on the 1 minute, as a bullish order block. But we've just come from a place where we've come to a fair value gap. We've raided those highs over here, and it's coming lower. Now, people who like trend lines, I personally don't use trend lines much, but you have a trend line here that's been taken. What normally happens now is that a lot of people will expect a break and retest to go lower. My personal opinion is that there's a lot of stuff over here on GBP, Euro USD. How are we doing? Let's go not the 1 hour, the 1 minute. So on Euro, that would have been the order block, which has already been broken. And just to AU, see where we're going. On the daily, let's make it the 1 minute. At the same time frame, AU has already rated highs after the massive. Again, this section over here, why was that important to me? Just because we have this as being sell side and this as being buy side. That's why I put it in the other day. As soon as that got taken, we have massive retracements into it. So what is your entry price? Yes, completely. So with ICT, you don't normally wait for the break to happen. You're waiting for the retracement into either, depending on your model. See, what's great about ICT is that, and why lots of people don't understand, why I think that a lot of people don't understand, is because he gives a whole bunch of tools, okay? And these tools are things like fair value gaps, volume imbalances, the electronic trading time and real trading time, and just general analysis and stuff within the market. And what he does is he then leaves it in your hands to create your own model. And to seek out your model within certain time frames of the day. It's not random. You become like a specialist. It is actually quite nice in that every person that trades ICT has a slightly different model, unless of course they're using the 2022 model, which is general in a way, like everyone was actually given a model from him to use. Yeah, we're still 50% in the range. And so yes, trusting your analysis is super important. Super important. And it also helps prevent you from getting into drawdown or any of those kind of issues. Yeah. So waiting too long is a good thing. So example, the reason why most times ICT and say don't, well, basically being a breakout trader, you become the liquidity. So right over here, if you can see, there's a whole bunch of liquidity that's been built up. Now what they do is that a whole bunch of people will set their trade order from that place over there. Okay, and they'll set their stops at just above that high, or as it's created over here, they'll probably do the same thing. So as price comes in, takes that out, it triggers all of the sell stops, which is the liquidity for the move to go up. The same thing can happen on if you look at the reverse. So now everyone's thinking, okay, well, price is going to go higher, so I'm expecting a breakout from these equal highs. That I'm doing equal highs over here. I'm expecting a breakout, so then they set their long in that position just above there. They'll set the long, and they'll put the stop where they'll put the stop underneath here, and they'll be targeting long. So if you're looking at this in a certain time frame, you're looking at this. If I was a breakout trader and I was putting it here, I would put my stops under here. So smart money obviously is going to be like, okay, well, we're going to snap you out, and but also depending on the market conditions, what can happen is some people would have gotten in to this trade that we took today, from here to here, okay, and they're expecting long positions over there, okay, like I am. Now what's happened is that as soon as price has made the next leg, like I said before, is that I set my stops. I set my stop position as soon as the next leg gets broken, and I've taken 2R. I'll set my stop position just above here, just above that candle. So I'm at least a pip or 2 pips in profit. But now looking at price and the liquidity that's engineering down here on the 1 minute, it looks to me like it wants to snap and go down to here, and possibly the sell side down here. Yeah, that was my analysis. That was buy side, sell side, and as soon as it took all of that buy side, so all the people that wanted to go long, that were breakout traders from all of this, they were like, okay, price is going to go above this, and eventually did, but it took that, came lower, and stopped out all of these people. And I mentioned before, actually, on Rodrigo, on the 2 streams ago today, that I expect price to attack both sides of the market, and that time was around here where it was just doing this, and I expected price to go higher and lower, and then make it move. Sorry. Especially after having a day, like the last day, we've just dropped down in price a lot. So the move, if you look at the time, okay, this is why, if you've been watching my previous streams and stuff, I have a certain time that I trade, which is between 9:50 and 10:10. Okay. Now within this price action, I want to see some sort of liquidity get taken, and then I want to see it reverse the other way. What happens in that price? Okay, we have on 9:30 over here. We have set the buy side over here. Okay, that's buy side. Now, price did not target this buy side. It left equal highs, and it came lower, taking out the sell side. And as soon as it came up, I'm looking for volume imbalances. I'm also looking for that fib retracement that I said, which is the 38. And they align quite nicely with all of the millions of volume imbalances that I said before. They were over here. And so that was your basic trade. Now, after it takes out this liquidity, there's another place that you can put your stop, and that is not underneath the low, as in this swing low. Okay, so within 10:10, it showed, I mean, within 9:50 and 10:10, it took the liquidity, it made a move, it came back, and then the 10:20, the trade was entered, was seeking now the equal buy side. Now for me, I actually today I only took this because I was seeking the shorter buy side, even though that was a full target, just because that's the Powell session. Big Daddy P. Now you can see this same model. Okay, ICT's 2022 mentorship model is basically, you see a whole bunch of equal highs that get made. So these equal highs. Okay. Cut out. Damn, that is weird. That is weird. I have to just share screen, window. Here we go. Doing my analysis. There we go. All right. Sorry about that. So his mentorship model is basically, you see equal highs or you see equal lows. As soon as that happens, it breaks, it comes up, and then you can take a trade. Now the same thing happened on this side. It set up equal highs, and as soon as it breaks, you look at fair value gaps, which is just here and here, and then that is a short. But because today is today, I wouldn't expect it to happen. Now, if you back test this, all right, it's fairly simple. Like my strategy is so simple. It's really, really simple. I'll do it again. Yeah, not yesterday because Powell, Big Daddy P, was speaking at 10. But the day before, we have here. Yeah. So what I do is I put a 830, which is over here. I look at the lowest low as liquidity. Now that hasn't in this all that, and the highest high up until 930. Over 30 is over here. Now, my whole strategy basically is it's taken this high and I'm looking for an indication, as in it has to break structure, which is right, which sets this up. This is structure. Okay. So for me, I have to have a body close underneath this price. Why? Because that little wick right over there, okay, that sets it. I have to have these bodies close underneath here. If that closed and created a fair value gap, I would have been like, okay, sorted, I'm going. I would have gotten into that to take it lower. But that didn't happen because they just continued pushing price up. So as soon as price went there, I was expecting price to get back to this gap down here. And unfortunately, within my time, it didn't happen. So it actually happened after all of this was taken. It just came higher. And from 2 o'clock, which was London open, then my trade played out right to that liquidity point previous day and into, and where was that liquidity point? If you look at it, that was exactly just before Big Daddy P started talking. So I wasn't actually in this trade short, and I wasn't going to trade when he was talking the first day. Another thing is looking at the previous day, exactly the same thing. So we're going to price. We have our 830 over here. We look at the highest high formed, which is over here. Okay. And then 930, which is over here. The lowest low over here. So that is buy side and sell side. Now what do we see? Price breaks sell side. Okay. And what does it do? You see this candle right there? That there is structure for me. Now that gets broken, what does it leave behind? Leaves behind a fair value gap, or if you wanted to, there's a fair value gap here as well. If you draw the fib on that from that high to that low, and you have your 38%, or 62%, sorry, which is right there, that could have been your optimal trade entry. And where do you take it to? You take it to the high, the buy side. And that happens, you can see, this happens at 10:50 until, again, let me put this down, 9:50 to 10:10. What does price do? Price targets first the sell side, and then it changes structure, and then breaks the upside. Yeah, no worries. It took me a while to get it as well. You can look to the previous day. I'll do another example if you would like. Before I'm just going to close it up for the night. Here we go. For me, it's evening. Oh, cheers. Thank you so much for that. Appreciate it. So here's 8:30, right there, 8:30 candle. We're looking at the high and the low. So for me, I would set that as my high because that's where the candle started at 8:30. We're looking at 9:30, where we're in price. 9:30 is over here. So where's the lowest low and the highest high in that price range? Right there. Okay. That's at 8 whatever, that's at 8 whatever. Now I'm waiting half an hour. So between 9:50, which is right there, and we have 10:10 just over here. This actually would have been a loss in the day for me, just because I would have seen this displacement breaking that structure as a leg, because I would have then put this in here and gone 38% and traded a short from there. But then I would have looked back in hindsight and been like, why was I so dumb? Because I didn't see that there were equal highs just above that price right there, that massive leg. There were equal highs right behind it. So whenever you're looking at this, you have to also look at the candles just behind. So if you're in a downtrend, we're looking at the candles just behind to see the equal highs. Now, as soon as that happens, we have from that break over there, so let me just pull that, we have this here as structure. Now, as soon as that breaks, you can start looking at your fair value gaps right there. You can look at your fib retracements, 38%, OTE, bang, 62%. Yeah. Okay. And where we're trading, a lot of deviations going short. And that actually happened at what time? The 11 o'clock candle. Big change. So if you have dodgy days and it doesn't, and your trade doesn't pan out, then wait for 11 o'clock. And if you are correct on the side, that's why for me I have a rule where I have two trades that I can take. It's either just after 10:10. So for example, this is just after 10:10. I would want that to aggressively start going lower. If not, okay, so I'm putting this leg into here, and we have that fair value gap over there. This would have been my trade. It's hyper aggressive, but that would have been my trade, and I would have been seeking again this sell side here, just a nice 7R. As soon as that happened, like I said with stops, this structure over here just got broken. As soon as I see that happening, I take my stops. Where's this? Here we go. Stops. I take my stops and I pull them from here right to here, just 1 pip into profit, just because it allows for spread. You don't want to be screwed over by spread and be at a loss. I'd rather have like a little bit of profit, because I'm expecting price to aggressively go away. And if it doesn't aggressively go away and it's coming back, then it means that we're in a choppy market, and then that's me done for the day. The same concept applies in that you have liquidity, then these equal highs over here, they get taken from this last outpost candle, which is a breaker, and I'm sure on that day you would find that there's a volume imbalance somewhere. Okay, let's remove that, and we'll just do another day for fun. I'm just looking at time. There we go, time. Okay, so we have big consolidation. What happens? What are we looking for? 830. Right over here. Okay, what's the highest high at 830? It's right there. The lowest low between 930, it's right here. Okay, as soon as that happens, I'm looking at 950, which is just there. I have this, like I said, because I'm hyper aggressive, I would, as price broke the structure, I'd be looking at fair value gap, putting it right here, and taking it lower to the sell side. Now, it went all the way down. After sell side, what's it going to aim for next? It's going to start hunting these. So later on, I'm expecting price. Let's just drag this out, and that is by the weekly gap. You see, later on, what does price do? It goes up into that range. So I'm on 1% now. 4% left. Not too bad. I'm just waiting for the But right setup. Possibly tomorrow. Today didn't pan out. I mean, today panned out. But I'm trading 0.5% leverage. I mean 0.5%. And on Monday I actually lost 1%. So I went from my 1% all the way down, and then now I went back up. Not yesterday, that as in on the Monday, my last stream, I went back up again because that's I traded the afternoon session as well. So now we're at a time where it's lunch right now. Anyways, let me just do another day. Where are we? 2, 3, 4, 5. Right over here. 8 o'clock. So we have 8:21, 8:34, 8:33 to 1. This is your sell side because that is after 9:30. Okay, and we have buy side. It's right there. Now between 9:50 and 10:10, like I said, I'm expecting price to do something, seek liquidity, and then start seeking the other side. So it seeks liquidity, and I'm waiting for a break of structure. Doesn't happen here because I want to see a body go underneath. Doesn't happen here, it happens here. Now because of all of this build up, and you have higher, lower, this area, this last candle right here is now your breaker. Okay, so you can label that breaker. And to determine which fair value gap that you want to use, I mean, how much confluence do you need? That'll be the fair value gap right there. Which also, if you were to pull this candle out, if you were to pull that little fair value gap in there, I mean, that's all within that breaker candle right there. Right. So again, I would short it from the breaker. I'd have this, and I'd be targeting the other side, especially those equal lows. You could, looking at this, all of this, especially with this at the, I would take that all the way down to here. Yeah. Looking at this price with these equal lows down here that have been set, like that is major confluence. You have equal lows here, and they're just going to snap. This is what I call a cascade. I love looking at price like this. So my trade has to, it's very specific. It has to set up within a certain time. Otherwise, I don't trade, as you can see. I would love to trade London, but my only problem is that I have a small child, and I have to look for, I have to take care of her. This is big news day. 8:30. It's all the way down here. 31, 8:30. This right here is 8:30. Yeah, that's 8:30. Now we have 9:30, which is over here. And this is actually the trade that I took, because again, from here on the 15-minute, I was looking left. Now the equal highs up here, they were just over here. They were like, there's a point right there where they were on the 15 minutes, there were 2 equal highs. So again, as price breaks up here, what's happening? We have one down, goes up, comes down, comes down. Now if you're looking for structure to break, that has not broken structure yet. Okay, great. We go to the next candle, the next red candle. It gets set up, it hasn't been broken. Go to the next red candle. Gets set up, equal highs were just over here, just up here, and it tapped in, and then it broke structure. we have this little part of price action right there, which you can consider to be low, high, breaks down. Okay, that last candle right there, that's your breaker. And this is actually a trade I was in, except I was in over here. As soon as these equal highs got taken, I've seen it enough times that as soon as it starts breaking down, and there was divergence as well on the chart, it wasn't, as you can see over here, it's a little bit higher, whereas this went a lot higher. And the dollar was diverging. It was just like everything had confluence. So that's where I was in. And again, from there, I just took a 2R. It was a clean 2R trade. But what I would have expected it to do is for it to come down to here. And because it didn't do that, that is now on my radar for later on. So I'll be looking at price later on, making some kind of funny moves. And we came back into it on this massive thing coming down now. So this is what I put into my higher time frame objectives. Let's see, I'll pull them up over here. Higher time frame objectives. Let's go to the daily. That candle was just there, and it just got taken. That's my higher time frame objective. Done. Good day, Mohammed. Robert, how would you trade the London session? Oh, Robert, you got a special thing next to your name. I like that. I think it means that you're a subscriber. Fantastic. London session. I would, the way that I analyze it and see London session is that there's two times as well. So the first time is I'm looking for, so let me just remove the high time frame objective, so that's not there. F in those levels, and we go down here. Let me just gonna remove all of this other crap, so that's off the chart. Okay, so London session is between 2 o'clock, which is over here. It's 2 o'clock. That's London, and London close is 11. This is technically where London closes. That's why I always have my 11s on the chart. So what I do with this is I look for, it's basically the same thing. I look for liquidity to be set up, okay? And you can see liquidity being set up right over here. And over here. So we have this over here. Just 3 o'clock start. Let me just make that 1. It's a 3 o'clock start. It builds, it goes, and we have liquidity down here. Now, what I'm expecting price to do is from this point is I'm expecting it to seek and then come back, and then we wait for America. What's it seeking? Hello. Let me just go forward. It's not being happy on the 1 minute right now. Let's go into another day. Here we go. So we have 2 o'clock over here. and we have equal lows-ish over here, and we have equal highs-ish over here. Okay, see that right over there. How I trade London is between 1 o'clock and 2 o'clock. I'm looking for liquidity to be set up, and you trade away from that. So it's different to trading. So it's different to trading towards it. So right over here, liquidity gets set up on the downside, right? Because they want you to do some kind of fake out. Now, what are we looking at on a higher time frame perspective? We're looking at all of this as buy side objective, especially these equal highs over here, these ones. From 3 o'clock, price should start making its move, especially Asia's over here. Asia gets set up between 7 over here. Okay, that's the Asian high, and then this is the Asian low. Now it's decided to take the high out first. So what can be your move after it's taken out the Asian high, especially on the 1 minute, is again, you can just look for has a broken structure here? No. Has a broken structure here? No. Has a broken structure here? Yes. What's in there? Fair value gap. Where do you trade? Aggressive. But because of these equal highs, I wouldn't trade. Where are we trading to? The New York daily. I mean, not New York, the daily opening. Because those equal highs, I would actually start looking for liquidity to go higher. So from there, I was referencing right there is this liquidity here from those equal lows. We're going into that fair value gap right there, and we're bouncing away from this, targeting the next daily. So we're targeting the daily, and if you trade, that would be what I call my 6 o'clock trade. So between 5 and 6. So between 5 o'clock, which is over here, 5 o'clock liquidity is just over here. Right, and 6 o'clock liquidity is over here on the dot. Yeah, we have all of this. It comes down, takes our side first, and then breaks up. Now, I wouldn't necessarily have been in this trade, because what it's done is it's taken this, it hasn't reached terminus yet. So on the 5 minute chart, you can look at the 1 minute, because I look at the 1 minute. But you have fair value gap, you have this price action right over here, which is very, very square. If you have very square price action, and then you see a high, a low, a high, you're looking at the last downward candle as your breaker candle. So we have fair value gap, we have breaker. That is your long position. You can even wait if you want and start taking. My model is just that, but if you want to add different confluences into it, so my model would have been from that fair value gap, my lows would have been underneath this breaker, and I would have been targeting those equal highs right there, possibly those, but those would be my equal highs, which is at 2R. But if you see how this liquidity over here has not been taken yet, because that's going to happen. This daily opening gap over here, that's what America loves to trade to. So we're waiting America 950 to 1010, the trade comes down. It's a thing that repeats daily. Okay, as long as you can read price. Now, understanding order flow is important in this context. So what we have over here from that breaker, what are we looking at? Well, we have blue candle, there is a fair value gap that's inside right there. you could take that as confidence that it's continuing to go up if you were scared to get in the first time. Second time, we have fair value gap that's created just here. That could also be an IFVG gap. Okay, we have fair value gap, which means, again, when you're entering these trades over here, you're setting your stops underneath the previous one. So if you are correct, which is these equal highs have been targeted, these equal highs have been targeted, if you know where you're going, if you know your direction, then it's pretty easy trade. Again, what do we have in price right over here? We have very square price. Again, you can look at this, very, very square. We've gone lower, we've gone higher. This last candle over here can be in that fractal, be considered a breaker candle as well. And from that, you can start looking from that section over there. It came lower back into this breaker, which is nice, but sometimes it doesn't do that. What you're doing is you're waiting for price to do something. And in this circumstance, I use what I call a break one market structure shift. So we have blue candle, a whole bunch of red candles. Now I'm looking for blue candles to break. So this candle, this whole little price action in here, this is blue candle break one, what I call it. And then see there's a red candle next to it, and then we have blue candle, and then we have red candles. This for me is, I would consider that to be a market structure shift. And you could trade from that breaker. If you see this going up here, you could trade from the market structure shift straight up to your high point over there. But on this day, I don't trade London. I trade and I don't take this trade because it's within 830. So it's like there are multiple different ways to see the market and enter the market. And for me, I just look for a specific thing, which is, again, very, very simple. 830, which is over here, bang. And we have 930, which is over here, bang. So at this 830 candle, that there gives that breaker confluence as well. So we have, it's come from here, it seeked sell side, now it has to seek the reverse buy side. So it seeks buy side. After that, exactly the same thing, between 950, because I don't trade, yeah, I'm waiting for 950, which is here, and 1010, which is there, and I'm waiting for it to show me that it wants to break. Reverse of what I just said about my two structure shift. This didn't happen over here because that would be the blue candles. That would be my break one. But because it's setting up again here, this is confirmation of break one. As it breaks below this blue candle over here, that is confirmation of my market structure, how I would consider market structure shift. Then again, looking at all this price action, you have very, very square price over here. It's very, very square. And we have a high and a low, and we're looking at that break over there. And within that, we have, like I said before, we have this, and that is your fair value gap right there. And you trade that short. Even though there's a lot of highs over here, doesn't matter. Because according to my analysis, that's what it should do. and you literally just trade that there, and because of that not being taken, you trade that down, and because you see all of this beautiful stuff and you see equal lows down here, you trade down further. And so yeah, that's just a basic outline of the way I see trades. James Darius, hello, welcome. Hope that wasn't too boring. A couple of examples. Let's go back and watch the video. Major confidence that this, we have this with this. It's coming down now. And market's just going to be choppy. Like I said, other news is coming at 1. So, no, James, I'm not in a trade right now. I did take this trade over here. Where was it?
Looking for pain, pulling a mob, pushing a train. I'll never stop, stick to a lane, pick up the pieces and go rearrange. I'll be the best above all the rest, put me to the test.
It's just underneath these highs. Right there. That was my trade for the morning. It's done. And then I've just been checking price, and there's a whole bunch of basically gave my strategy away. So yeah, took that and it's done. So with today being the way it is and looking at the 1 hour chart, I was actually saying that this price action right here, this candle over here, and this candle over here, these days I find very, very interesting. Just because of those candles, is that price, after it has done its manipulation, it's right now it's just sitting in the middle, and I've said I don't know where price is going to go because it's not within my time frame. It's sitting at 50%, and because it's sniped liquidity on the sell side, all of these people who were pushing for it to go short, and it's come and sniped a whole it's come in, all the people that were pushing here for it to get long, it's sniped them out too. And it's a day. It's a day it's just that price action right there in the 1 minute is perfect. This is like the perfect trading day if it was not news day for it to for my execution of the trades that I take. Robert, yes, same for indices. So it actually works better on indices, except you add the confidence of end dogs. So let's go back in price. Obviously I use higher time frame analysis, but here we go. Let's just look on this day. So sorry about my coughs. We have 8:30, which is this candle over here. Right. Now we have 9:30, which is 9:30, 30. Yeah. So again, my trade, especially if you are looking at this, yes. Yeah, if you're looking for price to be expanding from one section, which was the weekly opening gap, it's in the weekly opening gap. Now it's just gone above this high. So where's it targeting? The next weekly opening gap. Going the 1 minute at my time frame, 8:30 until 9:30, the highest high and the lowest low. What happened? Price broke the lowest low, and had displacement. What happened within that? We had our fair value gap. You had a volume imbalance. You could trade anywhere within that. The same thing, we have structure, we have break one that sets over here. We have market structure shift up here. So again, that adds confluence to the market has shifted in structure, and you can take a trade from there to there, and you just target either the high here or you target the weekly, and then yeah, this trade done for the day. We're finished. Between 950 right there and 1010, what happens in price? Yeah. and it's beautiful. It's actually beautiful. So we go back in price, go back. Let's look at another day where we're 950, and here we go. 8 o'clock, 8:30. So 8:30 is here, and 9:30 is this low over here. Again, okay, it stops over here, but what are we looking for? Previously, we have a whole bunch of, there's a void over here. That's also pretty important. Where there's no, in indices, where you see candles without bodies, that's a void. Without wicks. Whereas this is a volume imbalance. Or not through price. Now these are very important points, because if you are trading wherever in whatever time frame, you can literally be like, oh, there's a volume balance, it trades up into it, goes down, if you have sell side objectives. But so we're looking at price over here. Now within my time frame of 950 here and 1010, I have my 1010. I'm waiting for it to show me that it wants to displace 2 times. So it has once, and now I need to wait for that one to get broken. Does it happen? No. So I'm not in trade. So as it goes up, my time is done, and 11 o'clock hits. Things happen, but it continues going up. So we look at the previous day. There is another thing with indices that is interesting. So if you're looking at where the day started, yeah, which is over here, this is your end dog. I like thinking about this as, okay, 930 was right here. Now you have electronic trading, which is all of this price action from here to your 930. On a day like this, I would not be looking for a sell. I'll be looking for buys. As price breaks this over here, it comes up above this, between my time frame of 950 and 1010, I'm looking for a displacement in a direction, the buy side. So that happens right here. Why is this confluence? Because we have these volume imbalance over here, and we have a volume imbalance right over here. So these volume imbalances are showing me that price with large candles, like these are small candles, large candles wants to go up. Now, which fair value gap do we use? With volume imbalances, oh, this is perfect, void right there. Okay. Anywhere in here, from this to here, is your fair value gap. See, there's candles right there. That's your fair value gap. Plus it has a void inside. You could be looking at this one to this one. There's a fair value gap. And then there's a volume balance here. There's a void over here. you could look at your trade being from here to here, or you could look at it being from here to here. If you missed this one, you can get in the next one. If you missed that one, and it's broken these highs, you could get into the next one as well. Why is that important, that level? Void. Now, that void wasn't repriced to, so later on, what you're looking for, eventually down the road, let me just mark that level out quickly. That void right there. You go look at price. We're not there yet. So price is going to come back to that little tiny little section of price over time. But yeah, all the rest of this is not within my trading purview. It'll be underneath 1, 2, 3, and I'll trade up from here to the opening gap closure, which is right there. Price on the indices are so much cleaner than anywhere else. So we have a daily NWOG right over here, okay, and we have price just chopping around like crazy. Okay, now for me, as 9:30 happened, okay, 9:30, price came to the daily already. On a day like that, I probably wouldn't trade, just because it's very close to the price over here. But if it goes to the weekly and breaks viciously away at 9:50 to 10:10, that's showing me displacement. So I can look at the volume imbalance or the tiny volume imbalance behind that leg as my entry criteria for this trade to seek sell side. So Rafi, are the NWOG NDOG event horizons in forex pairs? Yes, they're very similar. They're not exactly the same, but they're very similar. So let's just go to forex quickly. I'll show you the previous one. So this is what happened on the event horizons are the same, except that's your opening gap right there for that day, right? Now in London comes in, takes Asia, and just starts ripping higher. Now generally what you're looking at in London is some kind of Judas swing, right? That was your Judas swing, that's your fake move, and as it breaks up, and what's funny about that is that happens at 6 o'clock. Like I said before, 6 o'clock is an important time. We have our 2 until 3, which is from 2 until 3. We have displacement, and then you trade lower into the Judas swing. The Judas swing goes higher, and we go into New York. Now this day was actually funny. This is the day I lost. I lost a percent. Is because 8:30 over here. 8:30, which is over here. I expected price to come down to that because of this. Now as 9:30 was set up, right there, okay, I was looking for price to displace and go short. Now as soon as it came up into here, it came down. I actually took a trade in here, And I was holding, expecting price, because it came down, it broke the one over there and it broke the second one over here. I was expecting price to go lower because that adheres to my trade plan. And that didn't happen. So then what I did was I waited. And I'm like, obviously there's a high time frame objective that they're screwing me with, which they did. These equal highs were, this high when it spiked like this, and I saw 1, 2 displacement. I went into the fair value gap right over here, in the middle, had my high over here, and again, I was trading short. That didn't work out. But my whole bias was based off of that gap right there. Which gap is that? That's the weekly gap. Take this rectangle away. That's the weekly opening gap. So price gapped away, and my whole bias was to go down. Now I lost that percent of 0.5, 0.5. And then what happened was in the afternoon session, which was over here, the bias is held. So it broke this, it came down 1, 2. I'm looking for fair value gap, which is right there. Short position. Had my shorts in here. I actually had the highs just over there. 0.5. I traded right into that. So I was done. Even if I pulled myself up to break even for the day. I don't expect this news to be impactful just because good old P is talking at 1. So, but ultimately, on that, my whole trade idea was correct. It's just the whole time it's set over here, creating that new, the new daily open over here, was I failed to have my in the weekly gap over here. There's a lot of liquidity in this point, so it's building, and everyone's like, oh, it's going to go long for days. I'm like, no, it's going to go short. If I was trading London, I would have literally taken this trade right here as a broke structure right here into that fair value gap. That would have been my trade, just because of the whole previous day's price range. And where would I be trading to? I'll be trading to that weekly gap right there. Bang. That would have been my trade. Like, there's a lot of moves that happen in London. But as a trader, you need to realize that there will be lots of moves that you will miss. And that's okay. As long as you have your strategy and your system and the way that you do stuff, you're good. All right, everyone. That's gonna be me calling it quits for the night. Well, it's my morning. It's 4:40 in the morning right now. So you have a fantastic and wonderful, lovely day. Let me just pull up my face. There's my face. You have a fantastic and lovely day, and hopefully everything's okay and you've learned some stuff. I will see you next time, which will be next Monday. I'm looking to be trading tomorrow and Friday as well, so I'll be posting some stuff on Twitter if you're interested, at the Only Gensler. And yeah, I'll see you guys around. Take care, look after yourselves, safe trading, be careful with big news and stuff like that. I'll see you soon. Cheers.